I'm Paul Sanger for the Finance News Network, and today I'm talking to Empire Energy. Empire Energy, trading under the ASX code EEG with a market capitalisation of 135 million, is a Sydney-based Australian oil and gas company holding 100% owned and operated assets with unconventional targets in the Northern Territory, Beetaloo Sub-Basin and Central Trough of the MacArthur Basin. Joining me today is Empire Energy Chief Executive Officer Alex Underwood. Alex, welcome back to the network.
Thank you, Paul, and great to be here in these salubrious surrounds today.
I'm glad you like the environment. Alex, let's start with your view on the unfolding discussion around looming shortfalls for East Coast gas and what looks to be the government's grudging acceptance that gas is here to stay and is a key pillar of any transition to renewables.
Yeah, I mean, the warnings about looming gas shortfalls on Australia's East Coast have been around for a long time, but we're starting to reach sort of max alarm stage now. We've, just this week we've got the Australian Domestic Gas Outlook Conference, and we're hearing from the industry body, Australian Energy Producers, and Ian Davies, the CEO of Cenex, that this situation is now becoming really quite critical. So, there have been warnings about the potential for serious shortfalls in the next couple of winters. The Australian energy market operators, forecasts are showing that demand is expected to stay flat for a long time, but supply is dropping all the time, and really, the time now has come for us really to get on with it and bring new supply into the market. It's not just about affordability of gas, and gas does have a very inelastic demand supply response where you can just have a slight shortfall and you can see prices take off. Obviously, those high prices hurt households and businesses, but this is also about the viability of manufacturing in this country and ensuring that we can remain competitive on a global platform. And so, it's been very pleasing to see that the federal government is finally starting to recognise the importance of gas. As you mentioned, the more renewables we have in the system, the reality is the more we need gas, because the sun doesn't always shine and the wind doesn't always blow. And, if as a country we're going to move coal-fired power out of the system, gas is going to be a critical feedstock. I would also note that, I've spent a lot of time in the US in my career in this industry, and in the US about 40% of power now comes from gas, and they're really leading the world in emissions reduction because it's half the emissions intensity of coal. And in the US, they've embraced shale gas, and now it's 70% of US production, and they've got the cheapest gas prices in the world and the cheapest energy prices in the world. It's literally saving the average US household thousands of dollars a year through affordable gas. And so, we've just got to get on with it now. We need faster approvals, and we're very blessed with a lot of natural resources in this country, and it's good to see the federal government finally recognising that.
And as you alluded to, I mean, the press are picking up on this now. That gas is the pathway through to renewables. Big article in the AFR, which you mentioned earlier. So you're just seeing that there is a real spotlight, and hopefully, as there's a spotlight, it just forces change and acceptance. Yeah.
Absolutely. I mean, we've already seen in the last couple of years what happens with shortfalls. I mean, when the Ukraine war took off, Australian gas prices went through the roof, and the government was forced to intervene. I think with the benefit of hindsight, we all realise that any intervention in the market has to encourage new supply, and it's taken a while for that to flow through. But the writing's on the wall. We've got to get on with it. We need more gas supply. It's going to be good for households. It's going to drive down inflation. It's going to support our manufacturing sector and ultimately economic growth.
Now, Alex, where does the Beetaloo and Empire fit into the East Coast gas narrative?
Yeah, I mean, if you look in the years ahead, particularly out to about 2040, there's a huge shortfall forecast on Australia's East Coast. So I think right now the East Coast uses about 1,500 terajoules a day. The shortfall is going to be over half that in just 10 or 20 short years. So we need new sources of supply. It's fantastic to see companies like Cenex and Comet Ridge and others looking to bring additional coal seam methane supplies into the market. But eventually those coal seam methane fields are going to start maturing and rolling over. And then, the Bass Strait, its production's falling off a cliff. I think it was down 25% last year. The Bass Strait was really an incredible blessing for this country. 7 trillion cubic feet produced, 2 billion barrels of oil produced, but it's really in its twilight years now. And when you look around, there's really only 2 other options. There's the Beetaloo, one of the world's largest shale gas deposits, and frankly, with some of the results that are coming out of the basin from us and our neighbours in the basin, I think it's looking like it's going to be one of the world's most prolific shale basins. The only other alternative we've got is LNG import. Now, LNG import, it's a horrible way to create energy security for your country. You're literally looking at gas, liquefying gas, potentially from as far afield as the United States, putting it on a boat and then regasifying it. It's not as good as environmentally, and also it will directly expose us to global LNG prices. So, I don't think in this country we should be competing against fundamentally our own LNG customers to be supplying our major population centres. And so, if we want to keep the jobs associated with this industry in the country, keep royalties flowing, that going to, in our case, the NT government, which with all the services it can provide, really the Beetaloo is really looking like in the medium term the only major domestic source of supply to keep our market suitably supplied.
You make a very good argument there, Alex. Alex, the Northern Territory government has made it clear that the Territory is in a precarious position from a gas supply perspective. How can the Beetaloo and Empire provide a solution?
Yeah, so the NT market, it's a relatively small market, but I think over 80% of Darwin's power comes from 2 gas-fired power stations. Gas is the source of power for mining operations up and down the length and breadth of the Northern Territory. And I must say the NT government's support for us has been absolutely fantastic. They have made a significant investment in putting a regulatory system in place. They actively promote this industry, both in Australia and globally. They're facing a major problem right now. So there are only a couple of existing sources of gas, and one of them's down in the Amadeus Basin is just chugging along quite nicely at a flat rate. But the other main field that supplies the NT market has, the production has dropped precipitously. It's only producing about 15% of what it should. That's causing a major energy security issue for the NT government. We as a company and as a basin are here to support the NT and its people. So, we want to get into production as quickly as possible. Empire anticipates being in production quite soon. It's just over the horizon. And in our first pilot phase of development, our intention is to sell gas into that local market. That'll bring downward pressure on prices. It'll help support existing mines and new mines and help power Darwin and other population centres. We see a very good opportunity to work very closely with the Northern Territory to help provide them with the energy they need.
So what I'm hearing there, Alex, is you're telling me that the Northern Territory government is being proactive rather than the reactive, which is great to see. Try and deal with the problem before the problem arises.
Yeah, I mean the Northern Territory government, they've got a plan to grow their gross territory product, so the equivalent of GDP at the territory level, to I believe it's $40 billion by 2030, and really this large deposit of gas fundamentally I think sits at the centre of that. So, as I mentioned, there's a lot of mineral deposits up in the territory, but mines consume a lot of power, and gas is the obvious way to provide that in these off-grid areas. And so they've been very supportive, and we're really looking forward to sort of repaying that investment they've made by getting the gas flowing soon.
And Alex, just to finish off, I'd like to discuss Empire specifically. Is it realistic to anticipate first gas for Empire in 2025? And additionally, what level of output can Empire deliver in the short term and beyond?
Well, I can tell you definitively it absolutely is realistic. I mean, we're working night and day as a team at the moment on our pretty well publicised plans to move into pilot production. We're quite fortuitous where we are that there's a pipeline that runs right through the middle of our tenement. It goes from the Amadeus gas pipeline out near Tennant Creek out towards the MacArthur River zinc mine. The constraining factor on our initial plans is the capacity of that pipeline, so about 25 terajoules a day. You know, it's not a great deal of gas in the scheme of things, but when you think about, you know, for example, Darwin uses 40 to 50 terajoules a day, it's pretty material in an undersupplied market. You know, we're very confident we can be in production in about the next 12 months, so hopefully by early 2025, if not later 2025, and really there's a couple of factors driving that. So first of all, we've had highly encouraging flow rates from our first couple of horizontal wells. We acquired a gas processing facility at a tiny fraction of what it had cost us to buy a new build. We're right on the pipeline. We're negotiating gas sales agreements at the moment. We're working on various financing options that, you know, I think drawing on my experience previously as an investor in this space is really designed to maximise value to shareholders and minimise dilution to shareholders. Submitted all our regulatory documents, and you know, assuming all goes well, we intend to be in the field later this year, installing the gas plant, hooking up the 2 existing horizontal wells, drilling another horizontal well, and that should have the gas flowing by early next year.
So Alex, I just want to get your views. Press are picking up that gas is, you know, the pathway to the renewable transition. But, you know, from an investor perspective, there's been some real empathy from investors, you know, investing in this space. Why do you think that is, and do you think that's going to change in the short term?
I think there's a couple of factors at play here, and again, if I think back to earlier in my career when I was an institutional investor in this space, you know, one of the key factors driving this, I think, is that shale gas is so new to Australians, and you know, if I rewind 15 or 20 years back to when I was at Macquarie and we were investing in small oil and gas companies, particularly those in Australia, you know, it took us, even as a quite sophisticated organisation, quite a long time to understand the potential of coal seam methane in Queensland. And those who got in on coal seam methane in Queensland early made unbelievable returns, and I must say a number of them are our major shareholders because they can see the same potential. But you know, it was very new, and you know, the industry, coal seam methane industry at that time, they were developing their type curves, which is the expected rate of production. Also at the time, you know, when you were drilling one coal seam methane well at a time, it was you know, pretty expensive as opposed to now where they're drilling lots of them. And as one metric, I think the typical coal seam well originally cost about $5 million. Now they're getting them down for less than $1 million. And that's due to the efficiencies of scale. And so, you know, now you've got shale gas. Again, shale gas, it's actually a more productive form of unconventional gas production than coal seam methane. And that played out in the US, where you saw unconventional started with what they call coal bed methane, we call coal seam methane. Shale quickly overtook it. Yeah. But again, the numbers are still pretty big now. You know, these are big wells and they're costing quite a lot of money. And so I think, you know, Aussie investors are still getting their heads around it. I must say though, when you go to the US and you tell them about the Beetaloo and you show them the flow rates you're achieving so early, I mean, they get it. And you know, I would say to Aussie investors, follow the money, right? I mean, if you look at if you look at the key players who are coming in on this basin, I mean, these are highly sophisticated, very successful US shale investors, and they can see the inherent value here. And so it is sometimes a little frustrating that there is that investor apathy, but I must say, you know, from my own perspective, I have no concerns at all. I think we're on the cusp of something pretty huge, and next time we speak we can, you know, discuss whether or not I was correct in that prediction.
Alex, I look forward to that. Thank you for your time today.
Thank you, Paul. Cheers.